joining me. We are going to moderate our ethics panel today. As we know, as ethical fundraisers, it's a huge part of our job to ensure that we're doing the right thing on a day-to-day basis. I'm really excited about our panelists today that are going to answer questions that you pre-submitted. If you have one that comes to mind, just write it down and bring it up, and we'll add it to the list as we're able to today. Our first panelist is Jim Brewer. He is currently with Pardee Hospital. He has had his CFRE designation now for 10 years. And has, yeah, as I call you, just come on up.
Thank you for coming here.
Alicia Freeman is the Executive Director of the Child and Family Resource Center in Hendersonville. Alicia is also currently pursuing her MBA with our partner, Lenore Ryan University. Laura Jeffords is the Executive Director of the Mediation Center that serves Buncombe, Henderson, Transylvania, and Polk counties. Laura is also adjunct faculty for nonprofit leadership in the Western Carolina University Masters in Public Administration. Tammy Ruckman is the Director of Development for the AFP Foundation. Tammy has held her CFRE since 1998. So as you can see, we have some really knowledgeable folks from a cross-section of social service, higher ed, hospitals. We're going to turn it over and we'll let Alex get started.
All right, now the way this has worked is that we have culled some of these questions from a variety of sources. So I'm going to read them, and we'll see who wants to jump in and take it. And if you don't, we'll call on you. All right. Number one, if a business gives a charity a special cut rate deal, does that qualify for a sponsorship? If so, are the dollars 1-to-1, or is there some kind of equation to figure it out? All right, so you got your whole sponsorship list in dollars, and then somebody's going to do an in-kind gift. Does that get a sponsorship along with everybody else? Okay, Tammy, how about you go?
I give 1-for-1 in kind or discounts. I give it 1-for-1, you know, $1 for $1. Because what do I care? You know, it's my way to get in there and talk to them and get them here at the event. And
have you ever had any of the other sponsors say, "What's the deal here?"
No.
Okay. Any other ideas?
I do the same thing. I mean, if it's a okay, like Tammy, I've done a 1-to-1. If it's kind of negotiated with the sponsor. I'm trying to think of an example. I mean, you might negotiate with a media sponsor for some percentage off of your ads, or buy one get one kind of thing. Like then they're listed as a media. It would be listed as part of your perks or those sorts of things ahead of time. And so I do the same thing, 1-to-1.
Okay, moving on. Wait. You didn't say gift in kind, you said a cut rate deal.
Yeah.
So there's a difference.
Okay.
At least that's what yeah, that's what the question said. So really this is almost like a bargain sale. This is what it normally costs. I'm going to give it to you this price. Is that difference? Does that qualify at a sponsorship level? And also, you know, sponsorship is to raise money and raise awareness. So are you saving money? Are you raising any more money? So I've had some difficulties about that.
Question out here?
I would just offer it. I think that's a nice way of thinking, and you might consider if you have it, if the gift in kind is something that you were already going to budget for, then I would say, I mean, I would be more inclined to give them full credit. But if it's something that we really you know, it's not something we budgeted for, but we'll take it anyway, you know, maybe we can mark it and sell it and put the money back. You know, if it's got related charity value, there's
Well,
another question.
That's another question down there
Yeah.
about taking some stuff that, how do you use that? Again, giving in kind is a different situation as opposed to a cut rate. And that's when you have to really figure out, is this a bargain sale, and does that gift part qualify at a sponsorship level? All right, good question. Good.
And I have a comment as well, and I think Jim and I would probably agree on this. And I can give you an example. A lot of money that we go after at ABYSA is not we don't go after a lot of philanthropic money yet. We do mostly advertising and marketing dollars. And part of the conversation that we have with, in this particular example, it's a local fast food chain restaurant. He said to us, we'll give you this many sandwiches and we expect, and this is what it would cost you. So this is what the sponsorship should be worth. And our answer to them has been, what you say, you're giving us retail price for the sandwiches. It's not what it's costing you to make the sandwiches. And we've actually been bantering back and forth for several years now with that local fast food restaurant. And we'll not do business with them until we know that what we're getting from them is really what we're worth.
Interesting. Okay. Yeah, I agree.
My executive director wants me to list all of our donors on our website. We don't have time to ask their permission. What do I do? Laura.
Well, you know, I'm thinking, moving forward, I think what you could do is when you're getting gifts, so if you're sending out a solicitation letter and you have a remittance card in the envelope, you could give people a choice to say, you know, I want this to be listed in your donors or in your annual report, or I don't want to be listed. Moving backwards, I don't know. I don't know that I would do that if I couldn't ask. You know, at the same time, I think it's common to put people in your annual report, and I don't know that all those people are specifically asked if they're going to be listed. So, I mean, I'd be a little surprised if a lot of donors got upset about it. And you could always remove them if they asked to be removed.
I had a similar thought, okay, express your concerns to the executive director, and then maybe pitch an opportunity. What a great way to get you and your board and people on team to contact your donors. This is a great reason to contact them, right? We want to thank you. And so you might set up a strategy going forward like that, give them the opportunity to opt out. Again, you have the whole annual report thing. I bet all of our annual reports are linked onto our website, so they're kind of there. I had that same question too, but I would turn it into an opportunity to contact donors while definitely expressing, okay, well, I'm concerned about this, so why don't we do this to make that happen?
But is this really equivalent to the annual, or is the annual report and the website, are they equivalent or not?
I mean, it's.
I think they are. I think they are equivalent. I mean, I think your audience is your audience. And just because it's online doesn't mean that you automatically have 90 million people looking at it.
Right.
They have the opportunity to look at it, but who of us has 90 million people looking at our website?
No, they're not. It's all of us who are looking at it.
Well, yes, but I'm looking at your annual report too.
Right.
So,
Okay.
yeah, I'm donating to your agency so I can see your annual report if I really want.
Bandy.
I think to your point about having an opportunity to contact your donors is perfect, because I have never recognized donors at an organization when I didn't contact them first to say, how would you like your name to appear in this publication or on the website or whatever? Because sometimes you might have gotten a gift from Dr. Smith, but he wants to be recognized as Dr. and Mrs. blah 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 Smith.
Yes.
And you don't know that if you don't ask them, and then they get this because you didn't put it down the way they wanted it to be for them. So I think you have to contact people first. I've never acknowledged anyone anywhere publicly without their permission first.
My board chair walks in with his list of gated community members and tells us to mail a solicitation to all of them. Do I do that? And if I do, what do I say when I get a call asking why I mail to all of them when I know it's not what they want me to do? Doctor?
I thought about that one. I would be really hesitant to do that mailing. I mean, we're violating their right to be, not to be approached, and we could probably do a lot more harm than good. And I would explain this to the ED saying, what is the outcome? What do you want? Is this just a general mailing, you know, like phishing? If that's the case, then it's probably not worth the cost of the mailing. You probably won't get a return, but you will get some people who are upset. So I would do my best to dissuade my ED from doing that.
I said that my response would be great, and the letter needs to come from you as their neighbor.
There you go. Good. Okay.
Yeah, I don't know if it's different than board members giving you names of people they think are good potential donors. I suppose the question is, does he have permission, or is he specifically prohibited from using that list he has access to for other purposes? And if that's the case, I think that's a problem. But if he's giving you names of prospective donors, then, you know, I think you could send them a letter in the mail. I don't know if I'd go knock on their door, you know, but.
No, I agree. I would take that, I would send a letter from him with some information about the organization and then go from there, see who wants to opt out.
But to be very clear, you have to understand that some of these communities say, don't do this.
Don't do this.
I sit on the board of another nonprofit while working for another in the same community. We share some donors in common. I struggle with knowing that those donors give more to the nonprofit that I sit on the board of versus the one I work for. Should I still be sitting on that board?
I have strong feelings about that. I do think it's a conflict of interest. I don't sit on any other boards. The only board I've sat on in years and years is the AFP board. I do think it's conflict of interest, and I have to represent my organization, and no matter how hard you try, it always comes back to fundraising. So you're going to give your information, your expertise, or something away to that organization. And I don't believe that nonprofits should compete, but reality is there are boundaries, and so I feel strongly about not sitting on boards. I get asked pretty regularly, and I always turn them down.
Yeah, I agree. You know, there's too much of a conflict, or even an appearance of conflict of interest.
For what it's worth, for 25 years I've been telling people, the reason you want me to sit on your board is because you want help with your fundraising program. I'll be glad to help you a little bit with that, but I don't want to sit on your board. You don't want me on your board. Okay, the grant you wrote and were awarded ended up covering more than the project required. Your CEO asks you to use the extra money for another unrelated project. What do?
I have a friend had this same situation, you know, and what I advised her to do is contact the grant maker. Let them know, explain the situation. The grant maker has already budgeted that money to your organization. As long as you can be above board and completely transparent, most times they'll just say, that's a great idea, we're glad we can help your organization.
And if they don't?
You offer to return the money. You don't want, because the remainder is probably so small, you want to keep the grant maker happy.
Agreed. I was just going to say the same thing.
But the important thing is to always have that line of communication with all your funders and let them know. In this situation, she was buying a moving truck for her organization and got the grant. The dealership said, we can do it at this special cut rate. And so you have money left over. She contacted the funder and says, we have this money left over. Would you like us to send it back? But we also have these other needs. And they said, great, for letting us know, go ahead and spend it.
Becky?
One thing I think is important to add on to that from a foundation perspective, there are several funds that have very specific purposes, and based on what funds were used for those grants, the original purpose may work, but what you think is an acceptable purpose may not work at all. So it's not to say that the foundation doesn't think that's a good idea. It may be that there were other strings attached from funds that they use in order to fund that grant. So be aware of that as well.
The last capital campaign that I worked on, we had monies left over from a previous capital campaign, and it was for a swimming pool that never got built. And the CEO just wanted to transfer monies from that campaign to the next campaign to say, oh, we're just going to use it to build a splash park instead, and didn't have the insight to think, perhaps we should ask the people that gave us that money first. So luckily, I was able to contact those 4 funders and say, hey, we have this money left over from you. Would it be okay with the board of directors if we used it towards this purpose, and this is why it wasn't spent in the previous campaign? And that was the only way we avoided having to return that large sum of money. But yeah, it was the same thing that Becky was saying. They gave it with particular intent, and they didn't want it to be used on a different project.
May I add that these examples were, including Mandy's, with the development person / consultant, whatever, talking to the CEO who said, just do this, all right? And the reason I bring it up is because most of the time it's going to be us fundraisers love our CEOs, but we're going to have to be very clear about how this is done and fight and win the battle.
The new executive director at my organization suggested that as a productive grant writer, I benefit from being compensated as a percentage of successful grants, rather than or in addition to being on salary. We know it's one of our AFP ethical principles to not be paid on percentage. How do you explain this to your executive director? Alicia's ready to go.
I started out in the world as a grant writer. The reason it's considered, and anybody can pipe in on this, an ethical issue is because you may act differently as a solicitor / grant writer toward the potential donor if your bread and butter counts on their gift. So your tactics may become more aggressive and not above board if you need to make a paycheck. That's the reason I stand behind that. Before I was aware, and when I was first starting out, I did have that arrangement with someone, and when it came down to it, and it was time to pay me, they had a hard time parting with their money. It was a little difficult for me to get. That I learned in that experience. I was a brand new person at this whole nonprofit fundraising thing, that was an ethical issue. I changed tactics. It worked out better for everybody. I was paid for my time and not as a percentage of the amount of money that I was able to raise.
That question always brings up something for me. So at the Mediation Center, we have some of our programs are fee-for-service programs, or they have a direct income stream, an earned income stream that's related to them. And then some of our programs don't have an earned income stream, and it doesn't make sense for what that program is and who it serves and what it provides. And so it's important to me that we don't distinguish between the importance of the work that's done by staff people who generate earned income or generate fundraising income, and the people who are working in programs that might be grant funded or funded with public funds that don't create that unrestricted income stream. And so I feel like there's a slippery slope there that goes even beyond grant writers about, do we pay, so if this person works in a program that has sliding scale fees, and this year they happen to serve more high-income clients than lower-income clients, and their fees are higher, should they get a percentage of that? So that feels really not okay. And I think there are a lot of parallels with how we pay other people on our staff, and that we need to have a salary structure that makes sense for the work that people are doing, and then have goals set for them and know what we expect to come from those positions versus valuing them year by year based on unrestricted income or grant funding that comes in.
So there's a little bit more behind the grant thing than just don't do it because you may not get paid or whatever. GAAP accounting rules say that fundraising must be paid for at the time it's performed. A grant may not come in for 6 months, so you're violating your GAAP accounting rules if you do that. The second thing is that GAAP calls for fundraising to be paid a reasonable fee. So if you write a $500,000 grant and you're paid hourly, takes you however many hours, that's a reasonable fee. If you write a $500,000 grant and you're getting 10 or 15% of that, not only may that funder not pay for that because that grant is not in the year, you've not done the work until after the grant is awarded, but they also, a percentage, if you look at a $5 million grant, that's a better example. 10% of a $5 million grant is not a reasonable fee. That is way too much for your time. I mean, all our time is valuable, but now you're up in, you know, Bill Gates' neighborhood or something. So those fees have to be reasonable and customarily accepted for GAAP to pay for them, or your nonprofit's going to be in trouble. So that's the AFP's reasoning behind this. Not only is it an ethical dilemma, it's also a dilemma for your nonprofit.
All right, I have a follow-up question that tags along with this. At the beginning of the fiscal year, your budget has been set. Your executive director comes to your development team, there's 5 of you. He says, if you all meet your goals as a team for fundraising, you'll receive incentive pay. Not a bonus based on funds raised, but an incentive. Do you sign the incentive agreement put in front of you?
No.
Tell me why.
Oh, I gotta tell you why.
You gotta tell me why.
No. Incentive or bonus, however you want to do it. If you are looking at, you know, say, you know, $2,000 incentive, you may accept a gift or pressure a donor to make a gift when they're not ready. Remember, we are, like Alex said, we are really a liaison between the organization and donors. We represent the organization to the donors, but we also have a duty to the donors. You know, we have to know that they can make a gift and that this will not cause undue hardship on them. And if we have, well, you know, I get $2,000, I can take my family on a vacation versus, you know, come on, make that gift. You know, even subconsciously, it can be effective too. I know, that was a...
Okay, Mark Goldstein had a question or a comment on the previous question about percentage fundraising.
Yeah, I was just going to say, as a contract grant writer, I get asked that a lot, and I always say that it's against AFP's code. And that one nice thing about that is I don't think I've ever had anybody sit there and argue with me. Everyone's kind of just said, okay, it is okay, and this might be where this other question was going, to take an incentive or a bonus. And I have done that once with someone who just flat out sort of insisted that they wanted to do business that way, and so we worked out a small arrangement. I try to avoid that, but that's one way. You know, I wouldn't get into that situation that Alicia described either, but there is an opportunity if you felt comfortable about it within the ethics code to do it that way, to do a bonus.
Angela?
Or
I think it's important to emphasize that is in the AFP code of ethics. It's totally fine to take compensation-based, what do they call it, performance-based compensation. So for them to come and say, if your team hits goal, y'all get an extra $2,000, it's totally fine. If, you know, according to AFP.
Well, performance-based means you're paid your salary. This is an addition. You know,
Right,
I mean,
so you can say it, yeah.
it can be interpreted many ways, but just the idea, remember, the only thing we have as fundraisers is really our integrity, that we're working in the best interest of both the organization and the donors.
They just
You
say
know.
such as bonuses.
Okay.
I mean, so it just, and I heard it in the discussion, I just think it's important for us to know, that is fine. Per AFP, it may not be in your organization, but to accept a bonus for hitting your goal, you know, especially if you're ED saying, we're setting your goal 25% higher. If you all can reach that, then you deserve some extra, you know, and it's set beforehand. AFP Code of Ethics says that that's fine, and I think it's just each organization figuring out how does that feel, and then it's back in the context of how does it feel in the organization culture. If you have other staff people, there's a lot of reasons to
One
not
of
do
them is
it.
going
but
to do
just
more
know
work
Code
than
of
the
Ethics.
other four, and
Yeah.
Right.
The original.
like, they need more of that bonus than their team members.
Right, right.
Right.
There is a big
Yeah.
slippery
The original
slope.
question was about grants too, which is I think a little bit different because I know like the group that I've got this arrangement with, I mean, I'm not talking to the trustees of the foundation. I'm writing this up with them, and then any communication is with them. So it could also be, you know, a little bit of a different situation if you're doing different types of fundraising depending on what your contact is, I would think.
I'm going to jump in here in just a second and just remind you that one of the biggest benefits of your AFP membership is that you are part of an ethical group, and what you need to be doing is picking up the phone and calling other people and broadening your base when things comes up. Because we can do these little examples and they all sound pretty simple, black and white, but in real life, a lot of these things get really tough. Kim?
Well, I was I'll piggyback on that. I think as part of AFP and a professional organization, part of what we deal with is that there are people out there in our area who are not part of AFP. And I've had interviewed a couple of grant writers just in this past year who insist in their contract that there's a percentage of each grant that comes in the door. So they're not bound by AFP because they choose not to be part of us. So I think we as an organization have a challenge to be a lot more public about this so that people get that that's what this organization stands for.
That's a
And
great-
to say no, I mean, I said no to both of these guys.
Yeah.
Came and sat in my office and I said, no, I'm not going to do that.
Good point. Okay, Mandy.
I think to the point of people taking incentives, I think that you could argue that in any department of any organization, someone could potentially get aggressive or, you know, below board or whatever with tactics about recruiting people for a program or whatever their goals happen to be. But, I mean, I've worked at organizations where it was, if you meet your goals for the quarter, you can have an extra day off of pay, or whatever, or we can give you a bonus, or, you know, whatever that organization's specific incentives were, but it wasn't just specifically for the fundraising department. It was something that was acceptable in the organization. So I agree with that. And then to the piece of grant writing for compensation, you know, I'm a professional grant writer as well, just like Mark, and one of the things I tell people all the time is, do you go to the doctor and only expect to pay them if they cure you? And we all think that's absurd. Why? Because they're professionals and that's what they get paid for. Well, we're professionals and we get paid to write the grants. We can't guarantee you that you're going to get the funding, but we still provided the service, so we should get paid for that. And I encourage all people that are grant writing to have that same kind of thought. You're doing the work, therefore you should get paid for it.
Yeah, very good. Now, we've done a lot with this in the past. I mean, we've all been involved with this. Here's another one that we've done a lot. And comfort standing here with his Lenore Rhine pen. Already? A donor wishes to express their gratitude to the professional by giving them a personal gift. What value, if any, would be appropriate and in what form? Artwork, tickets to a concert, restaurant gift certificate, flowers, you name it. How do we handle that, guys?
We allow our staff to accept token gifts. So it might be people give you a $5 Starbucks gift card, or a little jar of honey, or bring you a plate of cookies that they baked, and that stuff is okay. And beyond that, we would expect them to refuse it. Or if it was something that could come into the organization as a gift to the organization, that would be fine. But concert tickets probably aren't a good fit. Or just redirect them, like would you donate that item to our next event? Could we use that in a silent auction, or just tell them that you can't take the gifts?
Everybody speak to it. She just used the word token gift. What is a token gift?
Well, there's a state definition of a token gift, so you have to look it up. I just say, take me out to lunch so we can get to know each other better. You know, that would be the reward I want. And like Laura, you know, try to defer it, diffuse it, whatever. But sometimes going out to lunch or doing something, you know, let's go to dinner helps.
Yeah, Jamie and I were talking about that on the way over here. We're not running into that too much, thank goodness. So, yeah, I think it's probably just best practice not to take it or flip it like you said.
You have to have your mouth really close
Sorry.
to it.
It's been off the whole time.
Well, what she said was brilliant. She just
Agreed. I think probably just best not to take a gift.
Yeah, it can be difficult. We become, with many of our donors, we become very good. We know them, we know their families, we know what's going on. Oftentimes, you know, we become friends. The difference is between you can be friendly with your donors and not being a friend is if they don't call you when they're having to move. When they call you if they have to move, then you know you've probably crossed the line and you might want to reaffirm that this is a professional relationship. But I have become friends with several donors, and over the years we've gone to dinner, or they've invited me to go with them to see a game, but never say, here's tickets because we want you to have them. But if they did just say no, that's just not right now.
But your organization should have policies on these. I think it's okay to accept a gift as long as it's within the policy. And it's ethical and it's not out of the realm of what's appropriate.
All right, say a little more, Chad. What would be too much then?
$100. I mean, I think my organization caps it at $50. We have people come in all the time and leave stuff because we treat families, and those families appreciate what we do. They come in with a $50 basket of chocolate. We're not turning away chocolates. But I agree, there has to be some kind of ethical line, and I think that's in policy. It's in writing. It should be.
But Shannon, aren't you accepting that gift on behalf of the organization?
Right.
Correct.
Everybody's
I think that's totally different.
But there'll be personal gifts too for individuals, and if we have something that we deem that could be more than $100, we call that individual and told them that we can't accept them, we thank them. And they understand, but yeah, there is a difference between individuals.
Okay, Herb.
The circumstance that prompted that question, by the way, was a Board of Trustee member who gave a collection of artwork. It was worth $100,000 collectively, lots of pieces, 50, 60 pieces. And it was a big job to get valuation on all these pieces of artwork and all over the gamut.
Isn't your job wonderful? Don't you have fun little things to do that those of us who don't do your job don't really understand?
Well, we were grateful. We were very grateful that we could, you know, it's at any rate. So she wanted to give me a piece of artwork. I didn't have any designs on any of the artwork. I didn't even like any of the stuff. You know, but she wanted to give me a piece of artwork, and I said I just flat out refused her. No, can't do it. AFP, Code of Ethics, et cetera, et cetera. No, I insist. Well, I'm sorry, but I'm going to have to insist. I can't. And she said, by Jove, let me talk to your supervisor. And so she came in and talked to our vice president, and she said, why can't I give him this gift? And I tried to explain again, and he said, no, he's right. He can't accept it. And he said, but in his wisdom, like Solomon split it in half, he said, but the organization can accept it, and we can put it in his office so he can enjoy it. But it belongs to the university. It belongs to the university. Was that acceptable to you, Herb? And I said, sure, that's fine. I'm you know, weak piece of artwork. No. So they ended up, when I retired from there 7 years later, they gave me that piece of artwork as a gift from the organization, as a send-off. I don't know the value, but it might have been $100. I don't, you know.
Yeah.
They didn't like it either.
It was a go-away gift.
That's a great solution.
I would have still said no, but I would have been very tempted on that one.
Other examples of this that you all have really struggled with.
Can I ask about it? Okay, so I want you to tell me what you think. So I one time had the chair of an event committee who is a board member. He and his wife are chairing our event committee, and they're also, of course, donors. And I carried my event, I had a 3-ring binder. And one day I go to our meeting, and there sitting is the cutest little handheld file satchel. It was adorable. Because he was sick of seeing my 3-ring binder. I mean, I used it for work. Is that what you're talking about? No. Came from Staples? No. It was for me, not the organization, although I used it for work. Work related. Okay. We got a policy. Put that on the list. We gotta have a policy. Yeah.
Kim?
I think the way out of all this is to have a good policy.
Yeah.
The policy of the hospital says no. It doesn't matter what it is. $5 gift card, no, nothing. So it's easy to fall back because there's a policy. You don't have to think about it.
I need your policy example. Oh, you're gonna write it? Okay, good. Excellent.
How do you handle silent auction donors? Someone who is donating their vacation home, artwork to your silent auction, and they greatly overvalue that item.
IRC regulation says all gifts to silent auctions are not tax deductible. So they can put any value they want on it. But, you know, when we give them an acknowledgement letter, we do a description, but not a value.
Right.
It's up to them to do the value. And besides, it's, you know, it's, like I said, it's not tax deductible. Auction gifts are not tax deductible, according to Rule 170.
Is it wholesale tax deductible? Can't they deduct I might be wrong. I thought they could deduct wholesale value.
If it's sold.
Yeah, if it's sold.
If it's sold, they can deduct their cost basis. Unless it's if it's an item from inventory, then if it's opening inventory, if it's included opening inventory, they can deduct it. If not, it becomes.
Let's be sure everybody hears this, because this is an extremely important distinction.
Yeah, we were talking among ourselves, we forgot about y'all. Depending on the item, if the item is a gift out of inventory, say a business gives you, I don't know, a really nice accordion file or something, a satchel or something, you know, if that item is included in the opening inventory for their business year, then they can deduct their cost basis. If they acquired it after that opening business year, then this becomes just purchase is sold or whatever. You know, the IRS and IRC are very specific about it. But if somebody donates a week out of beach house, well, that's not tax deductible. You know, because they're not relinquishing control. So no matter what they value it, they can't deduct it. If an artist donates a piece of art, they can only deduct their materials. You know, and then once again, it's up to them to justify it. So if somebody says, you know, this piece of art is $100,000, you just say thank you for this piece of art. Let you and your accountant fight it out with the IRS. That's all you can do. You know, the problem becomes when people go to bid on it, and they go, I can't. You know, if the minimum value is, you know, $99,000, nobody's going to bid on it, so you're losing money. So then you have to say, we can't accept it. But you have both the value determined not by you and what it might be for your organization.
We don't value the gifts. Our accountants have always advised us not to. Exactly what he said. That's between the donor and their accountant.
And IRS.
And the IRS.
A workaround that kind of satisfies the donor, but also is not claiming that we assess the value. I've seen it done where you could say, thank you for your donation of X that you have valued at Y.
Right.
And then the organization is not responsible for that valuation, even if it were to be tax deductible. So I've moved an application.
Anybody else?
Can I ask a question? So we had somebody give us a piece of artwork for a silent auction.
and it came from the framer, the frame shop. And he represented to us that this, and wrote it on a piece of paper, that this was a XYZ print, and it was numbered and signed, and the value of this piece was $850. Wonderful. It's a light. We sell the piece for $850.
Okay.
The donor, the person who purchased it said, I would like you to give me some type of certificate of authenticity or just saying that this is what it's worth. So I go back to the donor and I say to the donor, would you mind giving me a piece of paper with your name on, you know, just something that I can give to the person who purchased it? I'm not going to do that, he said to me. I said, okay. I have this piece of paper here that says what you valued it at this amount, and he said, well, the print is probably worth 100, 150, 200, and the frame job is probably $500, $600, $700, $800. So that's where you get your value from. And I thought, you know, so I feel as though I can't give the purchaser a real authentication of this piece of artwork that was donated to us but represented to equal a certain amount of money. What would you do in a situation like that? Yeah, hand the microphone over, right?
Well, the person who purchased it, you know, they get no tax deduction because they purchased it for what they considered an FMV, fair market value, so there's no deduction there. You go back to the framer and say, you know, once again, you get into valuation outside your area. And you can tell the purchaser, this is what it was given to us, this is what they valued it as. I mean, that's it.
Okay.
There's not much else you can do about that. Of course, now in the future, you know, you want to have clear gift acceptance policies on that.
Yeah.
Would you give the $850 back to the purchaser?
I think I'd have to tell the purchaser and let.
Give them the option. Yeah, because that purchaser may be a bigger gift down the road, you know, so they may appreciate that. Say, this is what we've learned, we're free to work, you know, to refund it, or you can make it a complete donation. Just give back the piece and there you have a complete tax deductible donation.
Yeah.
That would be the first one.
Yeah, I'll just add, anytime you start dealing with artwork and the word provenance comes up, it's just very difficult to be sure that the history of the provenance is really accurate. And so be sure that you've got licensed, bonded appraisal experts who are doing all this.
Thank you. If I were your donor, I would, what you just I was just going to say, if I were your donor, if you were able to explain to me, well, this is what we were given, I didn't misrepresent this at the event. When I went back to ask what you requested, this was the answer I got, and I feel like I need to be very honest with you about that and let them make. I would be very grateful as a donor that you did that.
Yeah, that's my explanation.
Yeah, I think always be honest. Yes.
And again, give them the option to make this a real donation instead of a purchase.
Up here, we've had the opportunity to watch your faces and listen to your chuckles as some of these have come up. So we'd like one more ethical difficulty that some of you have had. Somebody asked the last question to this group. Come on, people.
Well, I got one. What about the year-end gift? When the check comes and it's past due.
Oh, gee, it's February 3rd, and the gift, the donor comes in with his check. What do I do there?
Unless, you mean a personal check? Sorry.
Personal check dated December 29th, just for good measure.
Yeah, I forgot to be carried around for 2 months. Yeah, I've had that happen. You just say, we can thank you for your gift, but we cannot count it in last fiscal year or last calendar tax year. We can't do it. It's not our choice.
Yeah, but you're bigger than the rest of us.
It's not.
You know, you just say that.
Alex?
The gift is not considered made until the donor relinquishes control of it. And then handing it to your office on February 3rd means they relinquish control on February 3rd. That's why you look at the postmark date. If it's
anything after 12/31, it is after 12/31.
Right, did everybody agree with that? I mean, that's just the rule. And you'd be surprised, some organizations have, in the past I was at another organization, I won't say the name, but a donor had made a gift, but they had made an arrangement with the people who were there before I arrived that we will count half of your gift this year and half of it next year. Unfortunately, when the auditors came in, they called them on it, you know, and I came in, I went, what's going on here? You know, mainly because they didn't know. You know, they had never gone to any of the AFP meetings or understood what the gift laws. But so sometimes that does happen.
But I instructed my stockbroker on the 29th to transfer the assets.
Yep.
I'm sorry you didn't get them until January 2nd.
Yep.
I relinquished control. I relinquished control.
Yeah.
Well, I do think that one, I think when you talked to the stockbroker, I think you did relinquish control. Because if you ask for it to be transferred, that it leaves your control. I mean, that's it. Our job is not to, the GAAP accounting rules, again, say that the fundraiser's role is to document the transaction. That's our only role. We don't have to value anything. It's to document the transaction. So if you keep that in mind and you're putting down what actually happened on your organization's end, that clarifies a lot of things.
Just for clarity on that matter, because that's a real sticky wicket. Your broker is acting as an agent on your behalf. So until the agent actually transfers the asset from your account to the charity's account, and it hits the charity's account, even if they've already transferred, until it hits the charity's account, is not a gift.
From the charity standpoint, but from your standpoint, your accountant is going to argue that it did leave your control.
Yeah, IRS would say until the asset comes into the possession of the charity. And even if it was in transition, you know, it takes a day to settle or whatever, the intention is there, and we want to give them the credit, but the reality, according to IRS, is until that money hits the account, they haven't relinquished control, because it's still in the control of the donor until it's deposited in the charity's account.
But I think that's contradicted with the postmark rules. So like if you drop something in the mail on December 31st, then you're fine. So,
yes,
and the charity hasn't
covered.
received it.
That's
So that's applying. Are you saying that applies to transfer of assets via a bank versus?
Yeah, anytime you have an agent who's representing you to make a transaction, they're acting on your behalf, and IRS rules say until you relinquish control, you or your representative. Then now, in the case of the postmark, yeah, they postmarked it on the 29th, and you didn't get it until the 6th of January. That's fine, because it was postmarked. You relinquish control. There's federal, you know, the stamp says you no longer have possession. You let it go.
But you've also got to realize that there are different IRS rules that govern different things. So these IRS rules govern charities, and these IRS rules govern the financial brokers, and these govern the taxpayers. So when you look at those things, you have to look at all three sets of rules to make a determination. And that's why as a fundraiser, you don't make the determination. You just document the transaction.
Angela?
And just one other comment, though, is, because I agree completely, is to be fearless, though, about crediting things to December 31st when the postmark is that. So many organizations, when I get in and look at their database, because they were on vacation, they enter gifts as January 3rd. But you just lost, if that postmark was December 31st, then you've just lost them for a whole calendar year if they give on a calendar year basis. So that's why it's just so important to know the ethical thing, and then to be fearless about the other side of it. And so you've got to know to watch the postmark carefully and count it correctly. I just see so many organizations that just lose gifts by counting them that first week in January that were postmarked. I do see the opposite too. But the organizations that keep the books open when...
So much of this is also a matter of people who actually get audited and live through it. I will tell you that I was audited when I was a full-time Episcopal priest, but never as a fundraiser. And it's no fun. Okay, gang, thank you very much. Now, next month, we have a program that I would term as very personal. And I'm the one that kind of twisted Amanda Edwards' arm to do this, but she's going to talk about work-life balance, how we do what we do without going crazy or get divorced. Okay? There you go.